quickly now give you the markets update. The JSE tracking weaker global markets on Tuesday as investors mulled over the state of China's economy and the Federal Reserve chairperson, that's Jerome Powell's testimony to the U.S. Congress later in the week. The rand falling by as much as 1.2%. That's the most in more than 3 weeks. Independent analyst Jimmy Moyaha joining us now for a quick sense of how the markets are faring in early trade. Jimmy, good morning to you. The markets in early trade, how are we faring?
Morning, Tony. Morning to the viewers. It's not necessarily the greatest start. It's another bearish start to the day, so it's the third consecutive day of bearish price movement, it seems. We're already down about 0.75% on the top 40. Industrials are down sort of about just under 1% as well. Resources down almost 0.2%. Financials are down as well, about 0.5%. And usually what we've seen in the last 2 days at least, where all the other sectors have been in the red, financials have been sort of keeping their strength and remaining slightly in the green. So interesting to see that they're now also in the red. Still, of course, very, very early in a trading day. But by all accounts, we're heading towards that 70,000 points mark on the top 40. On the all share as well, we are down 0.2%. As you rightly mentioned, we're also seeing some weakness on the currency side of it, with the rand dollar sitting at about 18 rand 40 against the pound sitting at about 23 rand 47 against the euro, just back above the 20 rand mark. What is interesting is cryptos are moving again. For those that are keeping up with crypto, Bitcoin's up about 7%, Ethereum's up about 4.5% as well at this stage. So very interesting to see that amidst all of the chaos and the uncertainty and the skepticism that markets contending with, that cryptos are potentially on the rise. It could be as a result of the recent announcement by BlackRock, the world's leading asset manager, that they've filed for a Bitcoin ETF with the SEC. But by all accounts, it could just also be markets saying, we need some action, we need some entertainment, because the rest of the situation might not be looking as great.
Let's talk Stats SA. That institution is due to publish the latest consumer price index for the month of May. What can we expect from that data, Jimmy, and in particular the clues it is likely to give us about the next interest rates decision?
Yeah, so I think we've definitely seen a moderating of the inflation, at least at a headline level, and we are anticipating that will continue at this stage. We saw that the last inflation print came in at 6.8% headline inflation, and we're expecting, early expectations sort of around Monday were as low as 6%, but we're a bit more realistic about it now. We're sitting at about 6.5%, so anywhere between 6.3 and 6.5% inflation coming through. Core inflation also seems to be improving. Marginal improvement there. We're expecting that to come in at about 5.2% as opposed to 5.3% previously. Interestingly enough, we did get UK CPI, and that seems to have gone above estimates as well. So UK, the United Kingdom, still battling with their inflation targeting and their inflation monitoring and control. It'll be interesting to see, how our inflation print comes through, and as you rightly mentioned, what that means for the central bank, because we know that the SARB also put out a business cycle indicator report that said that they're anticipating that going forward we might not have the growth prospects or the growth cycles that we anticipated in the coming 6 to 12 months. So that's data pointing towards a big slowdown from an economic activity point of view and a business activity point of view, and that might drive or influence what the SARB then looks at. We do still have another inflation print that'll come through before the next rates announcement in July. We are still contending with a volatile rand and volatile currency situation at the moment. So it is still a bit too early to tell what the SARB might be thinking. But if we are to follow suit with what's been happening globally and with what's been happening with inflation moderating as we anticipate, the hope is that we see at least a pause in the rate hikes and not another rate hike at this stage.
Let's talk company news. Less than 3 weeks after MTN signaled that it was unlikely to sell its quarter stake in the IHS, I should say, for the next 3 to 5 years, well, the mobile operator now coming to accuse the Nigeria-based tower operator of blocking its bid to have a greater say in how the business is run. What exactly is going on here?
So IHS and MTN are in somewhat of an interesting relationship. I mean, MTN sold some of their towers to IHS on a leaseback agreement. They also took up a stake in the business, and the IHS business, just for context, operates about 40,000 towers in Africa, and it is listed on the New York Stock Exchange. And so the problems at this stage are MTN is highlighting that although they have a 26% stake or an interest in the IHS business, they effectively only really have voting rights capped at 20% firstly, and they should have, as part of the agreement, the ability to nominate or have board representation, which they're saying they do not have. So it looks as though the agreement says that anyone holding more than 10% should have board representation. MTN says they don't. If you look back to what happened in June, IHS put out a statement to Bloomberg saying that it was an intentional reason to sort of limit the influence that MTN has on the business at the time of the initial public offering when MTN took up the stake. And they're saying that they don't think that the proposal that MTN has put forward now for an urgent meeting with the board to try and rectify this, they don't think that proposal is in the best interest of the shareholders at large. That is something that IHS said for a while back to Bloomberg. But at this stage, MTN not looking too happy with their predicament. They feel as though they have no say in the business, and they are heavily invested in the business. I mean, they own about a quarter of the business, as you rightly mentioned. So from their perspective, they're feeling that their shareholding is not really benefiting them, or is not really in line with what was agreed. And I guess the hope there is that they get some form of board representation or some form of say in how the business is operated. MTN has also said that they are not able to sell the stake at this stage, primarily because their view on the stock is that it is very undervalued at the moment, and it wouldn't be in their best interest to sell. So very weird and interesting situation that MTN finds themselves in there, especially if you look at the tower business and the fact that the infrastructure component of it all matters so much to companies like MTN. I mean, they did have an interest in telecom because of telecom's infrastructure business as well. So the infrastructure side of the telecom space at the moment definitely being one of the high impact or high demand spaces. And hopefully MTN gets through with whatever proposal it is they want to get through to the board.
Let's conclude with Anglo American's rough diamond sales. The value for De Beers' fifth sales cycle of 2023, those are out. Take us through their numbers.
So we have a provisional number sitting at about $450 million. Of course, we are still waiting for completed numbers actual numbers once completed sales have gone through. The provisional number from the last cycle ran, I think, until the 16th of May. That was about $479 million. So it looks like it's about a 6% decline or 6% moderation on the price between the two cycles. Does seem like a moderation, but I would hardly consider it a moderation considering we're still well above 450 million in sales. So there's still obviously some level of demand that is still very alive and well in the diamond space at this stage. So I think once the actual numbers come in, you might see that 6% moderation will narrow a little bit. Typically, actual sales come in a little higher than what we see provisionally once they've completed the sales. But by all accounts, it looks as though the fifth cycle that ended yesterday was a fairly okay cycle if you compare it to the fourth one.
Jimmy Moyaha is independent market analyst. Thank you very much for that market update.